going on, traders? Andrew O'Connell here with Pristine Capital. It's January 21st, 2022. Welcome to our market recap video. It is day 3 post my surgery. Feeling a little bit better, not much of a difference from yesterday, but I wanted to make sure I could still get this recap video out to you. I think I'm going to be feeling a little bit better every day, hopefully. Box scores for today. We talked about this yesterday, how this market's just getting really dicey. Yesterday we mentioned, hey, like the market could really fall off the rails into options expiration. And that's basically what happened. And you can see here, this is a major carnage. So we had the SPY ETF down almost 2%. Nasdaq QQQ down almost 3% in a single day. Small caps down almost 2%. Dow Jones was the best performer. And the ARK Innovation ETF was down almost 6% in a single day. And that is not normal by any means to just see like index ETFs down multiple percent. Really what that means is pretty much everyone is hitting the exits at the same time. And it's almost like there's a buyer's strike where ahead of this Fed meeting on Wednesday, no one wants to buy. It's like everyone's gotten the memo at the same time that, hey, the Fed has to raise rates. All that stuff we've been talking about in our videos. Raise rates, taper the balance sheet, etc. to fight inflation, and now it's like no one wants to step out in front of this market. We might see a little bit more stability next week because we don't have the options expiration in front of us. But yeah, it was just about as bad as it gets today. So on the glass half empty side, today was a bad day in the market. If you were long anything, you lost money. I lost money today, and I had 65% cash heading into today's session. But for me, like I've been doing this for a while as a professional, when the market's down like this, if you have any longs, you lose some money on your longs. It's really just part of the business, part of trading, part of investing. It would be great if the market was just like an ATM where we make money every single day. It's not really how it works. So it's always important to have the perspective that, hey, it's all about how you do over a campaign of 100 trades or 1,000 trades or over a year. It's really tough to get down on yourself. If it's like, this week I was looking at the stats and I think all the indices were down like between 5 and 7%. If you had a down week this week, it was really tough to like beat yourself up. I could see if you just went out of control with risk, that's something to take care of. But yeah, it's important to know that on weeks like this, it's not like the market, oh, we're never going to have an up market again. You're never going to make money again. Same thing when the market's up big. You don't want to be in a mindset of like, I'm on top of the world. Nothing can stop me. The market will never go down. It's always important to stay nice and centered. On the glass half full side, on the opposite side of this market volatility, there's always great buying opportunities. Because remember, you make money in the stock market by buying things and then having them go up. So it's always funny, like when the markets are at their heights, all these growth stocks are at the moon, everyone feels like there's no risk. Now there's actually a lot of bargains that are emerging in the market. And granted, it's still very risky out there because the liquidity is kind of like just moving out of the market. But there's a lot of good companies out there that are getting significantly discounted. So it's all about having the patience to just stick with this and really just navigate the volatility. Now you should see it as almost like a badge of honor. If you just started trading, let's say in like 2020, you've never experienced something like this before, and you're making it through and you're managing, it's definitely a badge of honor because everyone that survived in the markets, they've all gone through volatility events like this. All right, Finviz heat map. You can see, like, look at this. Amazon was down almost 6% today. So was Tesla. This is a blue chip company down almost 6% in a day. Netflix was down almost 22%. So yeah, this is a huge down day. So it's almost like you're surfing or something. Like, if you just get hit by like a huge wave, that's going to determine like the market conditions out there. You don't get to choose what the market does. You only get to choose how much risk you have on the books. So yeah, PayPal down almost 6%. And a lot of these stocks, they just went no bid. And when there's no bids, say if there's like a line of people that want to exit a stock and just no one on that particular day wants to buy, that's where you can get stocks where it's like a negative 10% day, a negative 12% day. because there was just a mismatch of buyers and sellers. But that's where you get big dislocations and you get big discounts in the market on companies. Our sector map, you can see looking very sad here. Pretty much, look at all this. The blockchain ETF was down almost 8%. ARK down almost 6%. Only consumer staples was up 0.08%. So yeah, it was a bloodbath out there today. So it's important to always work on your game, work on your process. You know, we can't change what the market is doing. So yeah, if you're feeling like very emotional, like, oh my gosh, like, I hate this investing and trading thing now. Like, you know, it's important to just make sure you're sizing appropriately. I think that's an overall mistake that I see in the markets. You know, people just don't size correctly. They're putting their entire account into single trades. Then if they mess up one trade, they're just gone. So yeah, it's very important to just, in these markets, I know it goes without saying, and it's kind of like, you know, a lot of the damage has already been done, but it's always just a learning lesson. Make sure you're sizing appropriately. Style factors, you can see here, growth was down 2.61%. Biggest to the downside, and momentum was down almost 2.5%. Now let's take a look. For my trades for today, I didn't do anything. So I made sure, I was like, today I could really hurt myself out there. And I already have a couple bounce trades on. I mentioned that I put them on yesterday. Put them on a little bit too early, to be honest. So that was, you know, my mistake. It's important when you make mistakes, just don't compound those mistakes. So I wanted to make sure I didn't do anything. The first like hour and a half of the session, I actually got off the desk and I was just kind of like looking at other things, working on other things, and just really like didn't want to get caught up in any like bounces or anything like that. The one thing that I did end up taking delivery of was some common shares of ARK. So this ARK ETF, I sold some puts on it, and those puts went into the money. I ended up buying ARK. So with ARK, this down to the dumps, I feel pretty comfortable owning some ARK here. So yeah, this ARK, it's just been a wave of sellers. Look at this crazy volume coming in, and you can see ARK, it's almost trading back down to where it was before the pandemic. See, I think the risk reward of being long here is a lot better. I just need to make sure, hey, this thing wants to keep cascading. You know, got to make sure I take my stop on it. But to be honest, I think, you know, next week we have the Fed. Fed's coming up on Wednesday. And I really think, and this is just a thought, so, you know, could end up being wrong, whatever. This is not something I'm going to like bet my life on. I really think with what the market has done, it's all due to what the Fed is doing, right? So I think with the Fed meeting on Wednesday, I don't really think the Fed can do much to like spook out this market. Like, I just think the market needs to hear the Fed, what they have to say, and just get it out of the way. If we're going to have a relief rally, I could see it being due to that Fed meeting. On the S&P 500, we sliced through the 200-day moving average, no problem. And we have a VPOC just below us at 43.50. So if you do want to play for a bounce, that could be an appropriate spot to take. Get some people in our group today talking about trying to do some test buys. See if that VPOC holds at 43.50. That could be a good spot to try a test buy. And that being said, if you're going to YOLO your entire account into a test buy, don't do it. Or like, yeah, this is always important to remember. If there's a trade that you can't lose, like if I put this trade on and I lose, I'm done. Like, one, that's just stupid. Like, you should never do that. You know, you can't put the trade on. If you can't afford to lose it, like, you can't trade it. Because that's where, you know, trading isn't like an all or nothing thing. Like, trading is a business that you build over time. See, it's very natural. If you look at the best traders in the world, most of them have a win rate of about like 30 to 50%. So yeah, like the best people in the world, they're factoring in that they're going to lose some trades. So you really have to like do the same as well, where you can't put everything into one. So yeah, if going for a test buy is too scary at 43.50, then just simply don't do it. Okay. Then on our Nasdaq, let's take a look here. Nasdaq down huge today, of course. And we have a VPOC down below at about 14,066. So could we get there? Absolutely. And I think on Monday, if we get a gap down, we get some big weakness, I think that could be a nice opportunity for some test buys. So I'll actually be looking at that. And again, you know, if that is too scary for you or whatever, do not do it. You know, just don't do it. So yeah, here we have our squeeze metrics. Dark index came in at 43.2. So a little bit on the lighter side, but for such a big sell-off today, it's really not that light. And then dealer gamma actually climbed up. We're still in negative dealer gamma territory. So we have to respect the risk here that we could see continued volatility. So we have Nasdaq. Let's check out our Russell. Russell got obliterated as well. And then Dow Jones also got obliterated. Let's take a look at our put to call ratio. So I saw that really spiked. And yesterday I mentioned in our video, hey, I'm not really seeing any signs of panic. Today I started to see those signs. So let's see if it's updated for today. Okay, this came up. So look at this. We had a put to call ratio above a 1 the entire day. And look how much it spiked into the end of the day. So this was just all out panic. And I'll show you even like our VigTech order flow. Check this out. Wow, would you look at that? After the close, just tons of VIX calls coming in. Love that. No, that's not what we want to see. But check this out. So SPX, mix of calls and puts. SPY, all puts. So this is fear right here. 450 strike, 445, 460. See a lot of puts going up. Everyone buying puts as the markets get very oversold. Tesla mix. A whole lot of puts going up. So yeah, into options expiration. I think this could be sowing the seeds for a nice bounce. Yeah, it's important to note, hey, we're still in this really elevated volatility regime. You just have to keep respecting that. Disney, some puts and calls. But yeah, a lot of put flow today is really the bottom line. Let's take a look at some of these areas of the market that are just getting absolutely steamrolled. Let's see, like the ARK Innovation ETF, we already talked about this one, super oversold. But look at some of these individual names like Shopify. Shopify was down almost 14% today. So you have to look at this and be like, is this starting to become a bargain? And granted, our job is not to be bottom pickers. Well, this is really more so like, I'm starting to think about like for long-term investing opportunities. Like Shopify, that's just such a fantastic company. And now it's trading at, you know, 882 bucks. Like, I'm not going to go ahead and buy this on my trading account, but yeah, you have to start looking at these like, wow, some of the best companies in the world, they are starting to trade for discounts. This company Global E as well. I actually bought some calls on this the other day. Global E, this stock is awesome too. This is a great company. They're partnered with Shopify. It's another e-commerce company. They help e-commerce companies go global. So it was down another 8% today. And this is due to no liquidity. So it's pretty much back down to the IPO price. Same thing, SoFi. SoFi, really nice move yesterday, but it gave back a lot of those gains. This to me, like, it's not like, oh man, I didn't realize SoFi was actually a bad company. No, for me, this is just like we had a bad liquidity event. So I think you're almost getting like a second opportunity to get long SoFi. So I think when these names bounce, this is likely going to be one that participates. Now let's see like some of these really overvalued ones. Cloudflare. This one keeps heading down. This one's now at 47 times sales. That's still very expensive, but before it was at like over 100. It was crazy. So I'm just kind of looking through the graveyard here just to like get some perspective on what's going on. Asana also getting killed. Celsius, yeah, getting killed as well. So yeah, overall, these names, you know, they're very beaten up. Like, let's look at Roku, for instance. Oh, of course, we got to look at Netflix as well. Roku is down 9% today. Look at Netflix, down 21%. So that is crazy. So now let's just set the stage. We had, you know, OPEX is over. made it past that. Is seasonality great into the end of the month? No, it's not. But we have the VIX. Take a look at this. The VIX is at 28.85. Legitimate vol event. This is huge. Huge VIX spike. You know, stocks getting blown apart. So yeah, I think, you know, for me personally, the market had gotten oversold. I was kind of looking at this and I'm like, well, it's too late to get short here. And it's too late to get short here. That's kind of been my mindset. For me, what I really want to focus on is some of these great short opportunities have come and gone. You know, this is another thing that's super important. It's always very easy to look at the market with hindsight bias and be like, oh, I know exactly what I should have done. Like, I should have done that. But it just doesn't help you at all to really do that. So right now, my trend model is still at a -3. And definitely want to respect that. But yeah, here we have this VPOC down below us. So I think there could be a good opportunity into Fed Wednesday into this VPOC to play for a bounce. So yeah, I want to make sure I'm not adding any incremental risk until I see, you know, some nice evidence of a bounce, the volatility coming in lower. Did a good job of doing that today. I don't think the risk reward of pressing on the short side here is really that great. Let's take a look at another one. I tried Micron a couple days ago, but leave off on this one. It just shows you how brutal the market's been. Micron, this stock had a nice power earnings gap. Then you could see really nice price action. Looked like it was going to break out. I bought some here in anticipation of this breakout. This one didn't work. I ended up stopping out of Micron, but look at that. So it just shows how rough this market's been, this relentless selling. So yeah, hope everyone had a good trading week. I would say if you did not have a good trading week, that's okay. This was one of the most challenging weeks. Like, this was the biggest down week since the coronavirus crash. So if you're like, man, I didn't nail this week, you know, it is okay. We're still in January of the new trading year. There's going to be plenty of opportunities. And I'm going to close off with this. I think this is very important. If you're looking at this S&P 500, let's go to the weekly chart. I believe we hit on this yesterday, but for everyone that got caught in this coronavirus crash, how many people do you think quit the market down here? Or were just so despondent that they were like, I'm done with this. I lost everything. So many. It took 1, 2, 3, 4, 5, really 5, and then the 6th week to really get through this. And there was a great opportunity on the other side. I'm not saying like this is going to repeat. You know, this is definitely not going to repeat the same way. But hey, we're on week 3 of this pullback. This was a really tough week. Look at this weekly candle. Does this mean like, oh, there's never going to be a good opportunity again? Like, time to pack it in? No. You really just have to assess, hey, where could I have done better this week? Learn from the mistakes, and then move on. So I hope everyone gets a nice, restful weekend. Hope y'all enjoy. Get some time away from the screens. Hang out with some family. I'm going to rest up. Make sure that I'm healing up from this surgery. We'll be putting out our weekend analysis videos for all members. So definitely tune in for those. And I think this is going to be just, you know, I'm really excited to actually dig in to all these metrics, see where our sentiment is, all that good stuff. Really just put the piece of the puzzle together for next week. That being said, hope you'll enjoy the rest of your weekend. I'll see you all on Monday.